Hello, everyone. Good morning. Happy Taco Tuesday. How's everyone doing today before the CPI comes out tomorrow and my taco prices go up? Good morning, Jacob. Good morning, John. Good morning, Sterling. Good morning, Patrick. Thank you for putting in the news, Sterling. Good morning, Heinrich. What else do we have? Good morning, Jacob. Gotta get through my good mornings to all the nice people who tune in. All my market friends. Good morning, Mark. What else? Well, hey, Ted, good morning to you. All right, we'll wait for some more people to come in. Maybe get some more likes. Good morning, Richard. Anybody who's new here, because we're getting more and more viewers again, please chime in the chat, even if it's just to say hi and good morning. All right. City CFO says U.S. consumers increased spending by high single digits, but is that due to inflation still, or is that due because, again, it adjusted for inflation? Because, again, spending goes up and you might be just buying the same amount of stuff, but you're spending more. What is it? Good morning, Tony. Sterling with the earnings yet. Next, Oracle, by the way, was a miss yesterday afternoon. Double top pattern looks like it's triggering. AutoZone was a miss. Thank you. Next one I was going to get to. Then we'll get to sort of more of the minor ones. But big one this morning was AutoZone. Yesterday was Oracle. In terms of numbers, Sterling already put them in the chat, but I'll go through them again. The Business Optimism Index popping up. Big jump for that for November after the election. So business optimism climbing. Non-farm productivity. Consensus was 2.2, down from prior, but in line with consensus. Labor costs up previous. Unit labor costs quarter over quarter, but down from consensus. Red Book big drop from the last number, 7.4. So we'll see about that if that trend continues down over the next couple weeks, especially with holiday spending going to be wrapping up. What else do we have? That's it really today. That is it. Hello, Charles. Good morning, Royal Palms. Let's go back to Ferguson Plumbing Supplies was a miss. I did not see that one. I was wondering what that was. Not because I have a position in them, but because I was wondering if stuff like that is starting to pull back, especially with builders starting to pull back. So let's check the map this morning. What is going on with Google? Does somebody have the news on Google? Up 4.35%. Oracle down 7% after their miss in earnings. So you got some technology, but you got comm services. Meta's up. T-Mobile's up. Google's up bigly. So it's throwing. If you can find anything, let me know what's going on with Google just from a headline perspective. Other than that, a rather mixed market. Again, comm services are screaming this morning and everything else is flat to mixed. Fed Watch Tool, remember, meeting in 8 days, but we still have the CPI and PPI first, but the odds of a rate cut right now, the market's projecting 86.1% that it will cut. I have to see how that changes tomorrow morning. Fear and greed, still in neutral mode. Remember, the market momentum still, even with yesterday's pullback in greed, but the strength, the new 52-week highs and lows are well off the October high area, and the breadth stinks. So you've got people just buying up this market hand over fist, but they're only buying limited things. And again, there is no fear. There is no fear in this market. Schiller PE 38.68. We don't need to check in on the aforementioned every day. After the close, we already covered these, and Sterling put in some other ones. We have GameStop, Stitch Fix, Dave & Buster's. Nothing that's going to really move the market. Tomorrow we got Macy's, but all eyes are going to be on the CPI. Remember, Macy's had to delay their reporting date because of that accounting issue. So, and then after the close tomorrow, we got Adobe. All right. What do we got? Hey, good morning, dark screen sleep. Is it something with Willow? That might be it. With their quantum computing. Yeah, that's probably it. Thank you for I read something there yesterday. The announcement of Google's new quantum computing chip named Willow. Well, I hope it doesn't turn into a weeping willow. By the way, I had to redo the targets on this. If you're wondering why the levels are slightly different, we did trigger the double. It had to actually be. It was a really nice pattern. If you were watching it on the 1 hour, you can see the double top within the range of them. And I came back down here triggering on the 1 hour. Then a nice sideways move. Remember, between the base and the candle bodies are right around the base is where I look for pullbacks. And if I draw those levels, just again, teaching because you can work on this yourself. So that's the area on any pullbacks. If you're looking to enter something, that's where I look for key pullbacks. I don't try to grab a spike higher, spike low, but I'll watch on the time frame also that rotation zone. You see, sideways move back and forth, giving you plenty of entries, opportunities to enter if this was the kind of trade you'd like to do in that. And then you got the declining rotation zone coming back down to the first target. And by the way, that's off the left-hand side. See, these are, so why did I pick that? Because we are against the rotation zones on the daily. So I want to go with the conservative targets, not the aggressive targets. So this officially hit stop reduction. What invalidates it at this point is a close back above 60.91 or a trade through 60.97. That does not mean you have to have your stop all the way up there. That means that's technically what invalidates the pattern. Okay, the area I'd be looking at is really the 60.80 level worst case on a closing basis, or maybe 60.81, right in there. But I'll be watching for further rollover plays in this. Now, if the CPI numbers tomorrow come out real dovish, this could scream up. But in order for me to start not looking for more aggressive rollover trades in the short term only, we have to really start getting a close back above that 60.91. Why? Because even if it bounces up here and starts rolling over, I will be looking for short setups. But then they still have to trigger with correct reward to risk. How is December really boring? We're not even to the boring part yet. Dark screen, we're not even to the boring part yet. I can understand you saying that around the holidays, but come on, this isn't boring yet. What else? You don't want to like Mike's stock humor. My stock humor is very bad. ANF confirmed another double top. Thank you, Daniel. So, oh, good. More government subsidies. All right. So, what are the next targets? The next target areas. Come on, don't do that. 60.52 and 60.44 should it continue lower. So that's what I'm keeping an eye on. Now, remember, we're still into the rotation zone. The major support, especially for tomorrow, should we take a dump, is back around 6,016. That's my next key target area I'd be watching. All right. NASDAQ, which did not have a double. You see here coming back down to very key support, moving back up. So all I'm watching in the NASDAQ, since there is no double pattern, if we get through to 37.5, this 21,537 area, I'm looking at 21,571 and 21,605 are my targets to the upside for anything on the long side. To the downside, I'm watching this very key support area right around 21,455. If we do break down, okay, if we do roll over, 21,402 and 21,368 are my intermediate minor targets. So I'm setting up the Dow coming back to the bottom of the rotation zone with cycles at the bottom. trying to close. This isn't a great wedge pattern because it's a very broad wedge, but it's trying to close in the rotation zone. I'm still going to be watching potentially tomorrow. This will be a nice potential bounce setup tomorrow if we do get one with the CPI because it might be a percent beat buy. So I'm paying attention to today's high tomorrow morning in the Dow. If we break down 44,081 and then the key on the closing basis is 43,809. That would trigger the probabilities to retest the lows from the 19th of November, the low area. The Russell, not much. Again, the Russell might be setting up for a percent beat buy tomorrow, but it would have to take out today's high and follow through on the close. So the only way I could see that is with very dovish CPI numbers. Other than that, the key area I'm watching on the closing basis of the Russell is 2355.5. I'll take a look at some of these stock things. Cocoa, you raised your target to 25K. Okay, Cocoa's 25K. There you go. For all those Cocoa traders, Cocoa is at 25K. The VIX, a little pop up from yesterday, just slightly above 14, but not much fear based off that pullback yesterday. The DAX still stalling out at the harmonic target. At least we get a short-term pausing bar. So if the DAX takes off again, I'm not expecting it to, but that would give me an intermediate target, and this isn't a confirmed pausing bar yet because DAX closing is not done. It would have to not be confirmed, it would have to take out yesterday's high. If it does not take out yesterday's high, we have a confirmed pausing bar, which would give a target of 20,710 if the DAX keeps running. Remember, the DAX is very overbought with getting to weekly cycle top areas. The notes, nice little pullback. So we're going to go into the CPI number tomorrow. Watching that, I'm going to be paying attention to the bottom of the rotation zone. The yields, though, that was a little nice trade. I talked about this one yesterday. With the double bottom, triggering, running through, whether you use the conservative or the aggressive targets, they were both all the way hit. So we talked about that little double setup yesterday, and now let's get to the daily chart. Right against the rotation zone. So can this keep running? Yeah. Right now on me, I'm watching key support of this 4.18 area. But if we get a hawkish CPI tomorrow, 4.3 is the next key target area. Dollar index did not quite trigger the percent beat buy yesterday, still following through. Little today, I'm just keeping an eye on this, the 62.5 level, 105.92 on a closing basis today. Because that could be considered a front run if this thing launches with the CPI numbers. But that's what's very key right there. So just updating these levels. Should it roll over again because the key support's coming in at 105.40. There is nothing with crude besides scalpy short-term stuff, so I'm not even going to bother. Natty gas for the little pop up, completing that little minor double bottom, and we're rolling back down. Remember, we still have probabilities lower. Gold, talked about this one yesterday. We did close above that 26.81 and falling through this morning and coming in on that key target area I talked about. So that would definitely be an area to potentially raise stops going into the CPI. All right, and we talked about that breakdown. If you missed that, if you missed yesterday, go just rewatch the gold section. Scan through the video where I talked about the shake and bake pattern. Silver. First target hit, second target hit. Remember, on a closing basis, 33.07 is key. But first and second targets are hit on silver from the double. So that's where that stands. With lots of little nice. See, this is why it's. We talked about this with last week. It's why I don't just focus. I may have more one market I focus on more for day trading, but for swing trading, I focus on where the setups are. Like crude, there's nothing. So I'm not even bothering with it. When you have setups, I mean, why force trades in crude right now when you have stuff like gold, when you have stuff like silver, when you have the dollar, where you have the yields setting up patterns and hitting the targets? You know, ignore, from my perspective, ignore crude. Once it sets up for good patterns again, it's in consolidation. I mean, the only thing is scalpy buys against support and scalpy sells against resistance. But if they don't manifest during the day, then don't force trades. Yen climbing nicely into the rotation zone, going to be very and against very key resistance. So this was the support level back at the beginning of November that was retested as resistance at the end of November, Thanksgiving Day, right here. Then we sold off. Some people might try to force this as a little inverse head and shoulders. It's a little too sloppy. I just use the 152.68 as the next key target to the upside. I hope I can give some good advice every once in a while, Richard. Euro trying to break down. In order for the dollar index to also really get a move on again to the upside, the euro has to get back below 104.45. Bitcoin, a whole lot of consolidation up here, still holding the rotation zone on a closing basis. So keep an eye on that. Spiders pulling back to the daily rotation zone. A little pop up today. The prior resistance level is still on any rally. I just use your retracement harmonics right here. Trading 605.27. So that's roughly where to 25. The next target would be 605.98. So right around there from 605.95. 606.58. I just use your harmonic levels going up personally. Okay, and if it were to roll over with this gap up, this will probably turn into a pausing bar. So if you're looking for minor levels, I'd be to the downside. If this rolls over, I'd look at 603.46 and around 602.81 as the key target areas. And 602.81 is coming into a very key support area. That's how I'd structure that. The Qs trading against very, very key resistance here, or support, support. So if that support breaks down, I'd be looking at 520.53, 519.85. Those are intraday levels. Other than that, same thing with the Qs. I'd be looking at the harmonics back to the upside. The key one being 523.97 and then 524.65. All right, let's get to some other things. What else? It's the whole month generally isn't low liquidity, dark screen. There are trades. And not every market's low liquidity. Now, we've had lower volume on the S&P. Although yesterday started picking up a little more. That's what I want to watch. But you know what? We'll see. There's going to be volume tomorrow and Thursday, and then next week we have the Fed. There's going to be some trading. Now, after the Fed, after we get through next week and option expiration for December, remember, triple/quad witching, then that's where I get to, we're not going to force stuff. But we still have December options expiration. We still have Fed meeting next week, and we got key inflation metrics this week. All right, let's see. What else do we want to look at? Daniel had ANF. Ooh, I gotta look at that on the weekly. I would not be trading that one as a double. It's very aggressive. See this almost invalidated. If you were trying to use this one, the targets aren't going to work. So this is not valid because see, the move that started it was here. So you can't use this. If you're looking for just short setups in this though, all I'd be doing is from this key low to this key high, use your harmonics. And the first and I'd be looking for the key target area to be between 135 and 131. Then if it breaks down below that, then you're looking at right around, it's already lost the 200 area again. You're looking right around 125. Let's take a look at Micron, MU. Yeah, this was confirmed. I thought this was triggered. This was triggered. Remember, once you trigger it here, once it's confirmed, it can take forever to play out without getting invalidated. All right? And this has not come back down to the invalidation point. So that double is still in play. Daniel likes going, so go watch for those areas then as the key target areas to go long. Does a percent B buy on a red candle with a long top wick, lower probabilities, see GPK? GPK daily. Yeah, I do not like percent B on that gaps. It drastically lowers the probabilities because it gapped up and then closed on a red candle. But it already, I mean, geez, this is something I would not touch. That's one I would not touch. I want on a buy for a percent B to close with a green candle. XLF. XLF. This could turn into a lopsided head and shoulders. This is one I'd be watching, this horizontal neckline right around this 49.50 area. And yeah, that could then roll over and hit there. I just want to see where the weekly rotation zone is. Not a great setup, but again, it starts breaking through that, then falls through below 49. We could be looking at for the gap fill. Keep in mind you are going into the weekly rotation zone. So once weekly cycles get to the bottom in this, I'd be start to still look for potential rotations back up on a weekly pattern in the XLF. We could stick with some daily weakness, even with a pop here with the cycles at the bottom, but we could stick with some daily weakness and rollover plays and then watch for potential weekly setups. Is it possible to be a billionaire day trading? I have no idea. I could care less about billionaire. Jeez. What do you need to buy so much in life that you just have a comfortable life? I don't know. I guess you could leverage enough stuff. I don't know. I mean, I know you can make tens of millions if you're good. But that's not what we're here for. We're here to do the right thing, and then the money follows doing the right thing. You're welcome, Patrick. All right, let's just peek at, Tesla, by the way. A little reversal after next harmonic, but we're getting into a very key area. Yeah, it could eke out all-time highs again, but I'm looking now for, there isn't one yet. I'll be watching for sell setups. This is getting way overbaked also. But NVIDIA, also very interesting. very interesting because you see Nvidia stalling out at the 62.5 and now rolling over, holding the 50. But if Nvidia starts rolling over again, we could really start to see some pressure in the market. Oh, Google was the other one. Google looks like that was a double that failed, holding on the 200. So, funny enough, you had a double against the probabilities on the 62.5, which weren't flipped. So you're still, your next key price is 186.18. 186.18 is the next key price up with Google. Willow, don't fail me now. All right. You are a short. The bigger pullback level on uranium is still, I'm still very bullish long term. Now, this is one we've talked about many times. It's a trade around the core position, but a close below 29.28, then I'd be very patient watching for a bigger pullback. I do not like to short uranium. And here is very key support just in front of that double trigger. So that's where I'd be watching for potential short-term buy patterns, unless that double triggers. Oh, you think, Sterling? It's going to go from, what a great economy to January 21st. Everything's going to hell. Everything's crapping out. Oh, look at unemployment's like, like one day after Trump takes office, he could control things to the extent that everything's going to crap out. But I completely agree that will be the narrative. All right. No more needing to listen to me today. So I just want to peek in on the S&P. Rolling back down. You do have a little mini double, which we could then retest the European opening session low area. So keep an eye on that. Keep an eye on that. Getting some selling pressure. I'm going to look at this little mini 15-minute double. It has not triggered yet. Let's see where the tick is. Not a terribly weak opening. Very, it's in that neutral range. Minus 400 to positive 400 is a neutral range. So not a terribly weak opening on the tick. So I'll be watching to see that the double is confirmed, but definitely not triggered yet. And it is sloppy. So that's something to keep in mind coming into complete support. If it rotates back up here, again, major resistance is this 60.71 to 60.72 area. We could be in for a nice range day. So I'll be keeping that in mind too. With that, you're welcome, Richard. Shall see everybody. CPI, don't get caught off guard tomorrow morning. Tomorrow morning, remember, we have at 8:30 Eastern time, we have the CPI numbers expected to come in. Still year over year, core inflation 3.3 is the consensus, and the headline is 2.7. I don't know about you, but those are nowhere near 2. Just because you have a 2 handle and it's climbing, nowhere near 2, so we're going to have to see. But it expected that inflation's not dying away. So let's see how that affects the rate cut odds tomorrow. With that, Dark Screen, did you listen to my little thing yesterday? If not, go listen to it yesterday. I'll talk to everyone later. Bye for now.